All right, so Money Me 72 commented on my video about the IRS statute of limitations on collections video. The IRS statute of limitations on collections is the 10-year time limit that the IRS has to collect a tax debt once assessed. With respect to that, Money Me 72 asks, does this count? Does this 10-year time limit count for civil penalties also on a business that went bankrupt and closed? And I'm assuming here that what Money Me is referring to by civil penalty is the trust fund recovery penalty. I've made a whole video about the trust fund recovery penalty recently, linked to that video at the top of the screen. But basically, in a nutshell, the trust fund recovery penalty is a penalty that the IRS can assess personally, okay? Personally, linked to an individual social security number of a responsible person that the IRS believes was responsible for the non-payment of trust fund taxes. What are trust fund taxes? Trust fund taxes are the employee's share of payroll taxes and federal income tax withholding that a business should have remitted to the government. Okay, the employer's share, the non-trust fund portion of payroll taxes, that would have died with the business that Money Me says is went bankrupt and closed. The trust fund portion, though, employees half the employee's share of Social Security tax, employee's share of Medicare tax, as well as the employee's federal income tax withholding that a business failed to remit to the government. The IRS can assess that personally against individuals, responsible persons, and through the trust fund recovery penalty. And the trust fund recovery penalty is totally independent, okay, of whether the business is still open or not. Okay. And it sounds like that's what Money Me is asking about. But the answer to that question is yes, Money Me. From the date of the assessment of the trust fund recovery penalty, the IRS has 10 years to collect. Okay. Keep in mind, however, that as I explained in the video, the IRS statute of limitations on collections explained, there are things that can toll that statute of limitations, that can toll that 10-year period. Entering into an installment agreement, requesting a CDP hearing, submitting an offer in compromise, filing for bankruptcy. These are all things that can extend that time frame. But at a fundamental level, the IRS statute of limitations on collections, that 10-year statute, does apply to the trust fund recovery penalty. In some cases, and these would typically be for very, very large cases, the IRS can reduce the assessment to a judgment, which can essentially give the government more time to collect the tax. However, this is an expensive, somewhat lengthy process for the IRS to go through this, because it must then involve the United States Department of Justice, and this must be done through the courts, and so just sometimes the cost and investment of that is not worth it for the vast majority of cases, right? Trust fund or otherwise, but that's always that is a possibility. Okay, so all right, I hope this answers your question. Money Me, I also responded in the comments to you as well, kind of in a more condensed version, but thanks for asking this question. I welcome questions on my YouTube channel. I might feature them like I do now, because it's just, I want to know what people are wondering, and I want to answer them on the channel, just in case other people are wondering the same thing. All right, folks, thanks so much for watching. See you in the next video.